Hello again, and welcome to our look at the upcoming Wednesday, September 3rd trading session. The economic calendar, of course, is in front of you. And as you can see, we have a lot of PMI numbers coming out immediately. But really, the one we're going to pay attention to the most will be coming from Germany. As per usual, it is the driver of the European economy overall. 56.4 is the expected number. Anything less than that could weigh down the euro and the DAX. Looking a little later in the day, we have the possibility of some type of movement coming out of Great Britain. Services PMI number is anticipated to be 58.5. That, of course, will have an effect on the pound and the FTSE. The better the number, the better the two assets should end up doing. The pound dollar, of course, has tested close to the 1.65 level, which is massive support. So probably going to get more of a reaction in cable than you will the FTSE, just simply because the FTSE has a lot to chew through to break above the 6,900 barrier or above, which is pretty significant. After that, we have not a whole lot going on until we get the Bank of Canada and its interest rate decision. It's anticipated to come out at 1%, which is unchanged. However, this will have a massive effect on the dollar CAD currency pair, especially if the statement is very dovish. A very dovish statement, of course, has people speculating that the Bank of Canada is even farther away from tightening than originally anticipated, or even possibly talking about loosening. If we get that and get a break above the 110 level, that could make dollar CAD one of the more interesting markets for the day. Later in the day, we have what is known as beige book, and that is simply an anecdotal kind of look at the U.S. economy by the Fed. It will be parsed by markets. They will take a look at it. Probably going to affect the stock markets in the United States more than anything else. Would anticipate it's probably going to be uneven recovery. That's pretty much what we've seen for some time now. It's really nothing to suggest that it's going to be any different. We'll look at currencies first, and this is the euro dollar. As you can see, we've tried to rally again during the day and again have fallen. The market seems like it's destined to test 131 and probably 130 before it's all said and done. Short-term rallies continue to offer selling opportunities, and we will treat this market as a sell-only market. You can see at the time of recording we're basically hovering the 165 level. That British number will be important. You can see there's a little bit of support just below it, so we still consider this to be 165 at this point. Look for that number to perhaps give a little bit of a reprieve, but this is a market that's pretty beat up. I don't think it's going to change. Any rally should be a nice selling opportunity. Over in the FTSE, we got a little bit of a hammer going on here. That does, of course, suggest that there is support below, but we'll have to wait to see whether or not we get any type of upward motion. 6,900 above is still resistive. Looking at dollar CAD, you can see that the market broke higher during the day, but really this is kind of how we look at the market right now. Draw a box here, basically between 108 and 110. We can get above 110, then we can pick up some steam to about 112. Really, at this point in time, though, it's going to take very dovish words out of the Bank of Canada in order to push that market, as far as we can tell. And looking at the S&P, you can see we're having a fairly negative session as we continue to hover the 2,000 level. Again, the beige book might be enough to push us higher. If not, we're just going to grind sideways in a fairly tight range, and that's very tradable as well. You can use short-term binaries for the back and forth of that. That being said, though, we are looking for an excuse to go higher. We'll get it sooner or later. Don't know if it's beige book. It might be non-farm on Friday, of course, which is a big mover. But somewhere we're going to get the excuse to go higher. And with that, we've looked at the Wednesday, September 3rd trading session.